Hey folks, welcome to the YouTube channel. If you don't know me, my name is Scott Stewart, and this is the place that I put all of my trading videos on. And over the last couple of months, we've started an amazing project, and that's been this zero date expiration live trading room where we get together, about 150 of us get together every Monday, Wednesday, and Friday, and live trade together the SPX, generally the SPX, in a zero date expiration situation. So it's a one-day trade. We're in and out of it throughout that day. We're trying to garner somewhere between 2 to maybe 10% off of that. You factor in losses, and there are losses that come along the way. We're trying to net about 5% a week, 20% a month, 240% a year. That's the goal. It's been an amazing experiment. It's been absolutely something that has been accepted at a much higher level than I ever thought it would be, because it is such a niche product. And there's really not a day now that goes by that I don't get inquiries about, hey, is this program right for me? And so that's the title of this video, obviously, is are you a good fit for our zero date expiration trading room? And I think probably the better way to approach this, if this is something that you're maybe interested in or thinking about, is to talk about whether or not the room is appropriate for you. Who it's not appropriate for. Who would not be a good fit for this trading room. And it's been interesting over the last week. I've actually turned away 4 individuals that wanted to subscribe to our trading room, and they were a little baffled, kind of like, you don't want my subscription money, you don't want my subscription dollars, and I would love your subscription dollars. It's not really about that. It's about making sure that it is a good fit and that it is a win-win-win situation. If you're not right for our trading room, and it is a very niche focus that we have, if you're not right for the trading room, it's not going to be good for you, will not be a good experience for you, will be a waste of your subscription dollars. You won't be happy. If you're not right for the room, meaning you don't have the ability to add value to the other 150 of us that are inside of that room trading, if you're not a good fit for the rest of us, then it's not going to be a good experience for them. They won't be happy that you're in the room. And if they're not happy and you're not happy, then I'm not happy. It's not going to be a good experience for me either. And so it's just best that we part ways before we ever actually join up. And so I want to approach it from that standpoint rather than whether or not this trading room is right for you. Let's talk about who this trading room is not right for. So number one, if you don't have trading capital, the room is not right for you. Okay. Trading in and of itself, just in general, is very discriminatory. Unfortunately, it is a very discriminatory opportunity. This is not an American dream, pull yourself up by your bootstraps kind of entrepreneurship opportunity that is so prevalent in this country, in the United States. It is very discriminatory in that the more money you have, the easier it is to make more money. Because the more money you have to trade, the more strategies, the more opportunities are open to you, the less risk you have to take, et cetera, et cetera. So you do need capital. If you do not have capital to start trading with, it's probably not right for you. Now, when I say capital, let me just give you a couple of numbers to think about. First and foremost, we have individuals in our trading room that are trading just $1,000. Okay, that's all they're trading. So when I say capital, I don't mean you have to have $1 million. We have members in our trading room that are trading just $1,000. But that's going to put you sort of in the hole to start right out of the gate with. Okay, what if you have a couple of losing trades right in a row? You don't really have a cushion, right? You don't have the ability to bounce back from that. So you do need some trading capital. Now, the big number for trading a zero date expiration strategy is $25,000 or more. If you have more than $25,000, you are not going to be subject to PDT rules. That's pattern day trading rules, which basically say, listen, if you're going to do more than 3 or 4 day trades in any 5-day period, we're going to freeze your account. We're going to lock your account for 90 days and only allow you to do exit orders. You're not going to be able to do any new orders, okay? So if you are trading less than $25,000, it does not mean that you're not right for this program. We have probably 30% of our members trading less than $25,000. It just means that you're going to need to trade the E-mini futures contracts rather than the SPX. Futures contracts are not subject to PDT rules. Okay. The only thing to keep in mind, you're going to pay more in commissions. The commission costs for that are more expensive. Okay. So again, if you don't have capital to trade, this is probably not the best place to trade. Number two, if you don't have the time to trade, then this is probably not the right strategy for you. We do live trade every Monday, Wednesday, and Friday, and then Tuesday and Thursday, I'm in our chat room, our live chat room, throwing in bonus trades as well. So I am a full-time trader. I trade from the opening bell until the closing bell, Monday through Friday. But that's what I do for a living. I understand that most of you have lives, you have careers, you have other things going on. So that being said, let me just say with a caveat here, you don't need to be in our live trading room every Monday, Wednesday, and Friday. You don't need to be taking advantage of every single one of our bonus trades every Tuesday and Thursday. I just had a very good conversation with one of our members who trades our system once or twice a month. And he said, based on his account balances, that that's all he needs. He needs 1 or 2 good trades a month, and it more than justifies the subscription cost to the program, okay? So don't feel obligated to say, hey, listen, if I can't be in front of my computer all day long every Monday, Wednesday, and Friday, this isn't right for me. But understand that that is the system. We do live trade all day long, Monday, Wednesday, and Friday. So if there is an opportunity for you to be in there just a couple of times a month, that's probably okay. But it is a very intensive program. We are in there all day long, Monday, Wednesday, and Friday. So if you don't have the time for a program like this, probably not right for you as well. Okay. Number 3, if you don't have the patience to follow a proven plan with positive expectancy, then this is probably not a program for you. Now, we've back tested this program extensively. It comes in around an 75 to 80% probability of success, meaning about 7.5 or 8 of every single trades that we do out of 10 make money. 2 to 2.5 out of 10 lose money. Okay. Right now, even though the program has back tested at an expectancy of 75% to 80%, we're batting around 84-85% success rate. Okay. Now, we would anticipate that that would continue going forward. The reason that we are doing better than expected, the reason that we should always continue to do better than expected, is because of the adjustment factor. We do not just simply allow trades that are losing trades to expire at a loss. We will come in and adjust them. In fact, the whole system is really built around adjusting trades. Okay, and so that gives us a little bit higher expectancy. However, even though that is the case and it has been a better than expected result, it's still 84% is what our batting average is, right? So that means out of every 100 trades, you're going to have 15 or 20 losers. Now, randomization would just tell us we don't know what order those losers were going to come in at, right? What if you start the program brand new and the very first 3 trades that you do are all losers, which could very well happen, right? You have to understand the numbers. You have to understand that over time we have positive expectancy, and you have to understand that over time the greater amount of winners versus the smaller amount of losers should average out to a nice profit at the end of the day. But it does take patience, guys. It's always frustrating when you incur a loss. And there are losses in this program, just like there are losses in any trading program, right? The key is we want to be able to manage those, and we want to be able to adjust those so that the profits outweigh the losses. Okay? But you got to have patience. If you don't have patience, the program is probably not for you. If you can't follow the rules, the program is probably not for you. We have a lot of rules in the program, but there are some biggies that I see people continually try to push to break all the time. Number 1 rule is never put more than 10% of your overall portfolio balances in any strategy. It doesn't matter what the strategy is. It doesn't matter if it is this zero-date expiration strategy or some other strategy, but no matter what strategy you're looking at, guys, there's no panacea out there. There is no investing strategy that is all upside and no downside. If there was, no other strategy would be traded. We would all be trading one singular approach, right? So you've all heard of the phrase diversification, how important that is for us. It's no less important here. We want to just take, at most, 10% of our overall portfolio to trade this zero-date expiration strategy. So if you have a $100,000 portfolio, you have $100,000 to your name, probably shouldn't be using more than $10,000 to trade this particular strategy. And then beyond that 10%, we're going to take that 10% and we're going to position size. We're going to scale into trades. If I'm trading $10,000 in a day, if I have $10,000, if I have $100,000, I've taken $10,000 to allocate to this particular strategy. I don't start off the day with that $10,000. I start off with $2,000 or $3,000, and then I add a little, and then I add a little, and then I add a little. I probably add to that position 2, 3, maybe 4 times in a trading day. So we're starting off very, very small. What does this all mean at the end of the day? If I have diversified properly and I have position size properly, it means that if we have a trade that goes completely against us to what we call full loss, max loss, we get a max loss on a trade, it should mean a 1 to 2% loss on our entire overall portfolio. Okay? Now, guys, I don't want to minimize a 1 or a 2% loss, because none of us ever like to lose money, but a 1 or 2% loss, that's what the market fluctuates on a daily basis. On a daily basis, the market can go up or down by 2%. So it really should just be a minimal fluctuation in our overall portfolio. And yet I still see people out there trading not just zero-date expiration strategies, but all kinds of strategies where they say, you hear the laments, I just lost 40% of my life savings. How did you lose 40% of your life savings? It's not the strategy's fault. It's your fault. You did not position size. You did not diversify correctly. Okay, so if you can't follow the rules, that's really, really critical. Another rule that we have is we try to exit our trades a half hour before the market close. That means that we are almost always inevitably going to leave some profit on the table. That's hard for a lot of people to do, but we do it because we know that that's when the craziness in the marketplace ensues. That last half hour of trading is when the market really does crazy things. We want to be out of it before that happens. So you got to be willing to leave some of the profit on the table. We try to capture 40 to 60% of the potential overall income for the day. So it is hard to have a trade that can give you a $1,000 profit for the day and exit it with only a $600 profit, only a $500 profit, knowing that you probably left $300 or $400 of profit on the table. But we do it because we know it's a prudent way to do it. Okay? And then last but not least, if you're not comfortable with a lot of activity, this trading system is probably not for you. There can be a frenetic amount of activity taking place in these trading sessions. An ideal day is that we leg into one side of the trade. Later on in the day, we leg into the other side of the trade, and the rest of the day, we just sit around eating bonbons, doing nothing, touching no buttons on our computer, and the trade expires fully profitable for us. Those are wonderful days. We love those days. They're few and far between. Okay, there are heavy, heavy activity days sometimes in this trading system where if you look at my trading journals, and you can see my trading videos here on this YouTube page where I've recorded a lot of these zero-date expiration trading sessions. In some cases, there's 20 plus trades. We do 20 plus trades in an afternoon, okay? Adjusting in and out of positions to try to keep us in the profit zone. So if you're not comfortable with a high level of trading activity, then this system is probably not for you. If none of those things scared you away, then you may be an awesome fit for our live trading room. So I'm going to put a link below. If you want to take a look at our trading room, I can get you a free one-day pass to come in and spend a day with us. If this is something that you already know you want to do, I'll put the link below as well to subscribe. But make sure that it's a right fit for you. If you ever have a question, folks, just DM me on Twitter. You can DM me on Twitter anytime. Let's chat before you sign up. Let's make sure that it is a good fit for you. Let's make it sure it's a good fit for my team of 150 traders that we got in the room right now. Make sure it's a good fit for me. Okay, let's make it a win-win-win, and I think it'll be an awesome experience. Thanks, guys.